Welcome back to Factful Finance, where we break down complex money topics so you can make smarter financial decisions. Here's the question we're tackling today. How do you build a recession-proof portfolio after a massive $4 trillion market drop? It's a question on many minds, especially after recent stock market turbulence. The headlines are all over the place. S&P 500 down 8% from its February high, tech stocks like Tesla losing billions in a single day, and major economic uncertainty brewing. But don't worry, you've come to the right place to find clarity and solid strategies. The market's unpredictable, but one thing's for sure, you don't want to be caught unprepared. So let's dive into how you can recession-proof your investments in these uncertain times, using a strategy that stands the test of volatility. Step 1. Rebalance your asset allocation. First, you need to reassess where your money is sitting. A diversified portfolio is your first line of defense against a downturn. Equities, bonds, real estate, cash, commodities. Having a mix of these can help spread the risk. During a sell-off like this, you'll want to make sure you're not overly exposed to just one asset class, especially when tech stocks or high-growth sectors can be hit hard. Take Amelia, a middle-aged investor with most of her portfolio in tech. After seeing her holdings lose over 20% in a week, she knew she needed to change. She decided to shift some of her tech-heavy holdings into more defensive sectors like utilities, consumer staples, and healthcare, industries that tend to be more stable when the market is rocky. By rebalancing her allocation, Amelia managed to minimize her risk while still keeping a portion of her portfolio open to potential market recovery. Step 2. Look for value, not growth. The stock market is cyclical. When everything's up, growth stocks like Tesla or Nvidia look like the golden ticket. But after a correction, the tide can turn quickly. Right now, some stocks are still priced higher than historical averages. Instead of chasing those high flyers, consider value stocks, companies that are undervalued relative to their fundamentals. Think about Henry, who always invested in growth stocks. After the market correction, he found himself with heavy losses. But when he shifted to undervalued stocks, ones with solid balance sheets and steady dividends, he found opportunities in industries like energy and financials. These stocks may not skyrocket like tech, but they offer stability, making them crucial in a recession-proof portfolio. Step 3. Increase your exposure to bonds and other safe havens. Bonds are a powerful tool when building a resilient portfolio, especially during market drops. Government bonds, particularly U.S. Treasuries, are considered one of the safest places to park money when investors are spooked. Take Olivia, who was heavily invested in equities. As market volatility increased, she realized that her risk was too high. She shifted 40% of her portfolio into a mix of high-quality bonds and short-term debt securities. While the yield may not be high, these assets provide stability and act as a buffer when the stock market plunges. Step 4. Consider precious metals and commodities. In times of uncertainty, many investors turn to gold and silver as a hedge against inflation and currency fluctuations. Precious metals can hold their value when markets are volatile and can act as a hedge against traditional asset classes. During the 2008 financial crisis, gold skyrocketed as investors fled to safety, something to consider as we move forward in these uncertain times. Think about Noah, who for years had kept his wealth strictly in stocks. After a major downturn, he realized that commodities like gold could protect his portfolio from inflation. By adding precious metals and even oil to his holdings, he diversified his risk and shielded himself from broader market volatility. Step 5. Keep cash reserves for flexibility. Sometimes, the best way to recession-proof your portfolio is by keeping a cash cushion. It sounds counterintuitive in an investment-heavy world, but having liquid funds available during a downturn can give you the flexibility to buy low when the market eventually bounces back. Look at Liam, who kept a portion of his wealth in cash. When the market dropped by 10%, he seized the opportunity to pick up quality stocks at a discount, even though he had to sit out some of the initial losses. His patience paid off as he bought key assets for a fraction of their prior value. Step 6. Pay attention to dividends. Dividend-paying stocks aren't just about income, they're about stability. Dividends can cushion the blow of market downturns by providing a steady income stream, even when stock prices are fluctuating. Take Ava. She was invested in high-growth stocks with no dividends. After her portfolio lost 15% in a month, she switched her focus to dividend aristocrats, companies with a long history of paying and increasing dividends. These stocks don't just weather the storm, they're often less volatile and can provide a reliable income, especially when the market is in flux. Step 7. Stay calm and avoid panic selling. Last but certainly not least, stay calm. Recessions are tough, but they're temporary. The knee-jerk reaction to sell when things are down is common but ultimately detrimental. Markets will recover. History has shown that time and time again. Take Amelia again. When the market crashed, she was tempted to panic sell, but instead, she sought advice from a CFP professional and stuck to her long-term strategy. By keeping a level head and continuing to invest consistently, she came out ahead as the market rebounded. Building a recession-proof portfolio isn't about predicting the next downturn. It's about preparing for it by diversifying your assets, investing in value, and maintaining a long-term perspective. This content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. Which of these strategies do you think would be most useful for your portfolio? Drop your thoughts in the comments. I read every one. Want to dive deeper into making your finances bulletproof? Don't forget to like and subscribe for more insights that will take your money management skills to the next level. If you found this helpful, you'll love what's coming next. Stay tuned. Click the video on screen for your next financial breakthrough.